Well, I think we should probably start because I know that Brian has quite a bit of content to cover.
Yep.
No
So,
problem. This is, yeah, a learning journey we're all on, and so I'm happy to be here. So anyway, if you feel we need to wait for a few stragglers, that's fine. But whenever you're ready to start, Chandra.
yeah, I think we can just do a bit of an intro. Good evening, and I appreciate you all joining us tonight. My name is Chandra, and I've been part of Kindred for more than 17 years. I started as an animal care volunteer a couple of years ago, and now I'm on the fundraising team. And working in donor engagement. And it is wonderful to see so many names that I do recognize here. Um, we are recording this session so we can share it with a few folks who couldn't make it tonight. So I just wanted to be upfront with that. We will also send a link to all of you afterwards. I'll be sending that out tomorrow in case you guys want to listen or go back to anything that you want to listen to again. So for tonight, we're going to start with our welcome. We're going to move into a 30-minute presentation with Brian. After that, we're going to open the floor to questions. And then we're going to wrap up with a short poll and a quick closing. Yeah, so I'm pleased to introduce our speaker, Brian Koning, Generosity and Impact Advisor with Abundance Canada. Brian has spent more than 2 decades working at the intersection of finance and philanthropy, helping people use their resources to create lasting impact. He believes in connecting good people to good causes and lives by the principle invest wise to change lives. Known for his relational approach and practical wisdom, Brian brings both professional insight and genuine heart to every conversation about generosity. So, Brian, I'm going to turn this over to you now so you can walk us through.
Awesome. Well, okay. Thanks, Chandra, for that intro and welcome. And yeah, just glad to be here in this friendly kind of close circle of supporters and those that want to know more about the topic of strategic generosity. That's really what we're here to talk about tonight, and how you can become more aware of strategies that are perhaps available to you, or maybe it's available to someone you know. And once the tax efficiencies are more well known, then new possibilities may open up for how you choose to do perhaps your support towards Kindred, which is really the topic that we're here for, of course. But the reality is, each one of you is a complex blend of causes and things that pull on your heart. And so Kindred may be one, and hopefully it's the top one at this season. But there may be other things that you also care about. And so some of these strategies are relevant to sort of that totality picture of thinking bigger in the concept of a generosity plan for how you view your life and your giving back to community. And so there's a number of things that play into that. So I will just launch my slides here, and then that will kind of form our template for our conversation, kind of going through a number of topics. So and then when we get to the end, then we'll have some time for questions, and you can throw questions into, let's see, do we have a chat feature? Well, yeah, I think that's all. We don't have um, a question prompt, so we can use the chat feature at the bottom. If you click there and type in a question, is just great. Or we can just have a way to raise our hands, and Chandra will talk about that after. So, okay, I'll begin with sharing my screen, and away we go. Okay, there we go. All right. Is the screen sharing? Yes. Okay.
Yes,
That's good.
perfect.
Okay. So we're going to talk a little bit about gifts that give back at tax time. And one of the stats I saw recently, because we're so, traditionally wired with the appeals, the letters that come into our mailbox, our email inbox, and a lot of it is really focused on posing the question of, will you give now? Will you write us a check? Will you give with your credit card? And the reality is that the vast majority of wealth that's held by individuals in Canada is it's not in their bank accounts. It's in other types of assets. And there's about 85% of wealth is actually held in other assets outside of just cash and what's in your bank account. So there's definitely some things to be aware of and strategies that you can take advantage of that you may never have heard of. And so one of the topics that we're gonna hear about today is how to utilize a giving vehicle that's been a platform used for charitable purpose in Canada for a long time, called a donor advised fund, and how that can allow the existence of the donor advised fund, and if you were to activate one, how that allows you to process more unique types of gifts and allows you to really ramp up your ability to give as well. So when there's some tax advantages there. So, but first we'll just dive into a little bit about like who we are and then why we're here. And so I always try to capture this sense of cause for abundance and why we exist and how we partner with donors and charities in these three words. It's partnership, stewardship, and legacy. And so what I mean by that, and it reflects our overall motto with Abundance Canada. It's generosity changes everything, and so that really plays into this sense of together we build relationships rooted in trust and purpose. So both charities and donors working towards a common goal in partnership, and then the stewardship is recognizing the management of funds. It's a sacred trust ensuring that the goals of the charity and the donor are preserved for the long term. And so you'll understand more about what that means here shortly. And then also just this aspect of legacy is really that why question, like why are we here? And what are we involved in that gives us that sense of significance, right? So we go through life chasing success, for example, but how do we move from success to significance? That's that concept of legacy. What are we impacting and leaving behind for the long term? And the causes that are most dear to us are significantly a part of that. And so we have a community of over 1,000 donors across Canada. We're national, and have over 270 million in assets under management from donors that are donating into Abundance Canada and using our platform for their philanthropy. So the history of Abundance, we've been around for over 50 years. It actually began in 1974 as the Mennonite Foundation of Canada and facilitating charitable giving. And they had a mortgage business originally, but eventually that kind of shifted with rules in Canada, and they began to focus in on the donor advised fund space. Now, this space, we were not by far the first ones in this space. We're, not a small one. We're probably, in the medium size. There are many in the large banks have them as well, but they don't really advertise them because it's not for the banks. They don't get up every day for the purpose of philanthropy. They get up every day to make money for their shareholders. And so they're not as inclined to encourage the charitable side, the charitable giving. But that's really what we get up for. The first donor advised fund in Canada was started by the Vancouver Foundation, actually, which has been around for a very long time. But they started one in 1952, so that's kind of the history of that. And so in 2024, we dispersed on behalf of donor requests over 55 million dispersed to over 2,000 charities in Canada. And so, and for context, we've had, a busy year this year. Just in the last 2 months, I just took a quick look at my own profile of donors that I'm stewarding and those relationships I'm responsible for. In the last 2 months, I've had donors give to 197 charities in the last 2 months, totaling over 2.6 million in the last 2 months, just the donors that I'm in relationship with. And so there's 9 of me across the country. So this is a growing space where generous people find their place and a sense of agency in executing their charitable purpose in a more intentional way. And so some of that has to do with just that it's the changing landscape of donor preference in Canada. So this gives you a little bit of sense of the space that we are in. So in 2016, there was $3.2 billion in Canada in donor advised funds, and it's continued to grow year over year over year till 2025. You can see now over 12 billion, which is it's a rapid and fast growth. And yet it's still a topic that so many people are unaware of, and they're unaware of what they can do with that. And so that's what we're going to talk about today. And so, but talking about legacy and why we're here, I'm just giving an example of this is my legacy. So, what we get up for each day is our legacy, and it's our loved ones and the causes that matter most to us. And so this is my family. This is the legacy that matters to me. So I've got 5 children, all grown and out of the house. I was privileged to walk my youngest daughter down the aisle this past summer. So now we got them all. My wife and I have them all married off and launched into life. And so that's already a sense of thankfulness for the legacy of being able to do that. And then all of these grandbabies have been arriving fast and furious for the past 5 years in my life. And so that has resulted in a gang of 10 now under our household umbrella when they all come over to hang out. And so again, just bringing that forward as, well, I like to know who I'm talking to, and I like you to know who you're talking to. But this is an aspect of, okay, what matters is, it's family, it's purpose, it's impact and community. And these are the things that give us satisfaction in life. And so, what is a tool that may be able to help you with that? And by extension, then think strategically about how it may be a help to Kindred. And so, I've been referring to donor advised fund as the tool. And essentially, what that is, it's this process you see on this screen where a donor, because we are a public foundation, then you take this money that you want to use for charitable purpose. Um, and it doesn't have to be only just cash, and that's what we're going to talk about here. Gifts of securities is a big part of what we do. So you donate that into the Abundance Foundation. So because we're a public foundation, then we issue you the tax receipt for your donation. And then, depending on what your intention is, maybe some of it you want to go out right away to a cause like Kindred, but maybe this is the beginning of your journey with generosity. And what we will do then is invest it in our consolidated trust fund. And so that's a fund that's well managed by a very capable group out of Winnipeg, Manitoba called Cardinal Capital. They're a national firm. We're also headquartered in Winnipeg, but we have an office in Ontario, Winnipeg, Calgary, and Abbotsford, British Columbia. And so what that means is then just like you invest money for your own wealth building journey, it also makes sense in that aspect of maximizing. If you wanted to maximize your capital for yourself, by extension, it also makes sense to maximize any capital that you want to use for charitable purpose. And so we'll invest that and allow that to grow. And then we're now in this relationship of managing your donor advised funds, and then you would request a grant to the charities that matter to you. So that's what I've been busy with over these past 2 months. A lot of our donors are really wired for the idea of year-end giving, and that's a big part in the charitable sector. And so every day the inbox is going ding, 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 ding as people are sending requests for us to send out the money to the charities. So we do all that administration for them. They simply send us the email and say, please send $5,000 to Kindred Farm Sanctuary, or, and then usually there's a list of, 6 or 10 different causes that people want to give to. So it's really kind of that simple. It's very easy to set up. It's just you get your name, address, phone number, email, all of that information, send that in. We then launch the account. You can immediately fund the account by donating in, and then immediately you can begin sending grants to charities and utilizing the communication channel through us to execute on that. The other advantage is you've received your tax receipt up front, and so we issue the tax receipt. So once the money is requested to go to the charity, then that's already been receipted. So the charity doesn't have to issue any tax receipts. So it simplifies things on the charity's end. They just receive the grant money from you and carry on and put it to use. And then you're not chasing 12 different tax receipts at tax time and maybe forgetting some of them. And I've seen some of the stats that there's like a very large percentage of tax receipts that are issued in Canada that people never claim. It's actually a ridiculous number. I think it was like in the 40% range or something like that. So this also avoids that headache too, because you really have gotten just one And so it's not shouldn't be that hard to keep track of one. So it's organized. It allows you more impactful, and that's fulfilling. And it also gives you sort of a centering point for your strategy in your future generosity decisions, as because you can keep building it up over time. Each time you add to your fund, you get another tax receipt, and it's entirely up to you when you want to begin granting out of the fund. So we're not in competition with the charities. I like to make that clear too. We're part of a more collaborative approach in empowering greater generosity. And what actually statistics have shown is when individuals begin giving through their donor advised fund instead of the old way of giving, which was just sending directly to the charity, donors often become somewhere between, I've seen 3 times, 4 times, and even as high as 6 times more generous because now they feel like they're in the driver's seat. They're not just in a reactive stance waiting for the next appeal to land in their inbox. They're now thinking intentionally forward in the driver's seat of their philanthropy and what matters most to them and when they want to create impact. So that's where the donor advised fund becomes a well-loved tool by many individuals who move in that direction. So this just kind of puts it into a bit of a graphic, having that idea of a plan. Your assets go into your fund. You think about your philanthropic goals, and down in the middle there, where it says ways to fund your plan, there's your donor advised fund. There are all these different ways. You can do gifts of cash, of course, send us a check. You can do gifts of publicly traded securities, gifts of life insurance, gifts of registered accounts, company shares, if you have private shares in a company, gifts in your will, and so forth. So there's a lot of different varieties that you can, ways of giving that will allow you to receive a charitable tax receipt, add to your gifting fund. So it's a donor advised fund by definition in Canada Revenue, but we call it a gifting fund. So when you establish a gifting fund with abundance, then we would call it the Chandra Vidimir Gifting Fund, for example. Walter and Betty Friesen Gifting Fund, whatever. It's so you get to, and you can call it, really anything you want. Usually it's, the names of the individuals. And then that allows you that sort of centering point for your generosity planning. So here's some case studies and ideas like just the thinking that people have had to why they began this journey of generosity. So Sandy is proud to maintain her independence after her husband's passed away. She wants to give more to these causes. She's uncertain about the impact of living alone. Dave and Wendy are empty nesters paying off their mortgage. They are led to give, but are uncertain how to go about it. And so this just empowers people to be able to have a place to center their giving and then sit back and thoughtfully decide how and when to give. So they're in control. They're in control then of getting the tax receipt on the front end, and then they're in control of the when to create the impact on the back end as the funds head back out in due time. Um, and so some of the advantages there too is you can create a plan. So where we have many donors that will create a plan that says we want to give $10,000 a year, or even like 4 times a year, quarterly, to Kindred Farm for using that example, and we want to just keep that on autopilot ongoing. So they send us those instructions. We set that up in our system, and they don't have to think about it again. So every 3 months, Kindred Farm gets another $5,000, another $5,000, another $5,000, and then they'll do that type of thing for multiple charities. So that's structure that is very helpful for many people. And so when we try to now progress into the topic of Kindred and how do we address the needs that are there? And there's many. I know that you've been working on the campaign for a while. There's ongoing animal rescue and opportunities that will come up. You've got with a farm, there's always projects and renovations going on, I'm sure. And so the need just really doesn't end. And so sort of bringing that thought to the forefront. Whoops, go back here for a second. I'm just going to give that an example here for the idea of giving of publicly traded securities. So giving stock is a tool that a very high percentage of our donors make use of. And that's what I was getting at earlier when I said like 85% of the wealth is held in other assets, not just cash. And the stock portfolio is is by far probably the most common area where that's held. It's also one of the easier ones to actually give, and it has a significant tax advantage. So, for example, if this individual, Bob, say buys a stock for $5,000 originally, 15 years later, it's now worth 20,000. If he sells that stock, he'll have a capital gain of $15,000. That's the tax rules. So you get penalized for doing well, which is like, that's a whole other conversation of why things are the way they are, but that's the rule. And so the inclusion rate is 50%. So on that gain of 15,000, that's 50% would be taxable income in the year of the sale, which, Bob doesn't want to have, a tax problem that year. And so Bob thinks, well, what if I donate the stock? What will happen then? So if he and so that's the advantage. He will not have to pay tax on the capital gain, and he'll get a donation receipt for $20,000, right? So there's the deal, right? You bought it for 5,000, but if at that same time you would put $5,000 in a bank account, saying that whatever, like just a checking account or savings account, 15 years later, that one $5,000 is still in cash and sitting there. It's still worth 5,000, but the one that he invested 15 years later is now worth 20,000. If he was then to like just take the 5,000 that's in the bank account and then donate it, well, he's only getting tax receipt for 5,000, obviously, but the amount that he invested of 5,000, which is now worth 20,000, he gets the tax receipt for the appreciated value. So he gets a higher tax receipt than what it originally cost him. And it also wipes out the capital gain. So it's completely waived. And there's no tax consequence to donating the appreciated securities. So that's a very attractive giving that a huge number of our clients, our donors, are using at this time of year. And so the process for them when they do that is they contact their financial advisor and they say, I would like to make a charitable gift of stock to Abundance Canada because I want to give from my gifting fund. The advisor will then say to them, okay, I will take a look at your portfolio and I will find which stock is in your portfolio that has some of the highest gains, the ones that would potentially trigger the largest tax consequence if they were just to like sell them for their own purpose. So those are typically the ones that they will then choose to donate because then you get the highest advantage of the appreciated value on your tax receipt, and then the largest gain, capital gain, is waived and avoided. So here's another way to look at it, just to put it in a chart, just to make it hopefully clear again. So here's the contrast again. So if someone was donating $50,000 cash to charity on the left-hand side, um, or sorry, if somebody was to sell the securities, so instead of donating them, if they thought, hey, I'll just sell those stocks and then I'll donate the cash. Well, if they did that, they'd be exposed to the capital gain, and so then they have a taxable capital gain of $20,000. So that's 50% of the gain. The gain is 40,000. 50% is taxable. That's called the inclusion rate. Might have heard of that on some news story or something a little while ago when it was in the news. And then that means there's a tax bill owing of $8,000. Or you could give it in kind. So that's the term, gift in kind. So gift of securities is given in kind straight through to the charity. And so we're a registered public foundation. We have charitable status. So then as that type of charity, we're able to process the gift in kind, liquidate the securities, meaning sell them, and then deposit the proceeds in the gifting fund for the donor. And then the donor has that 50,000 to go ahead and make disbursements to charity, which is the intention. And then there's zero tax payable. So they now have a significant tax receipt and no tax payable on that gift. So it's very, very efficient. Eliminate the gain on the donated securities. Client receives the donation receipt on the fair market value, and then they are transferred to Abundance Canada into the gifting fund, and then they have that significant donation receipt to offset other income as well. So that's super helpful to the overall goal of tax efficiency. All right. So yeah, here's another kind of a case study, somebody that holds publicly traded securities, and then they're able to liquidate tax-free, avoid capital gains. They get the tax receipt. And then again, this is the advantage I was making a point about earlier, why significant growth in this sector of those that choose to use donor advised funds. There's no rush to choose your charities, and you can thoughtfully plan out your grants to charities in a time frame that makes sense to you. So there's a lot of gain to consider there. So we'll just keep marching through a couple other examples, and then we'll get to some questions and stuff at the end. Is probably just easiest to do that. Um, so here's another example in another category is individuals that that own shares, private shares in a private company. They're actually able to donate their portion of shares and get a tax receipt for that. So let's say the scenario there might be somebody that is perhaps retiring, wants to sell their shares of their company, but then they realize they don't really need to sell them for like they've done well enough with all their investments, and their needs are taken care of wealth wise. So then they look at the idea of, well, what are the advantages of if I donate my shares? And again, there's some significant advantages to do that. So they would again avoid all the capital gains that would have been payable. So as you can see on this example here in the little grid, that's significant. So the shares, the value originally of those shares would have been say 100,000. Now this company has grown and over time, and now the shares are worth 500,000 of that individual's portion of the overall company shares, like private company shares. And so that's a capital gain of $400,000. And then there's the capital gain, the inclusion rate and how much tax is payable. And so it just allows for a significant tax savings and then a charitable tax credit as well. So just a significant strategy. With this strategy, we've done a number of them. We don't do them that often because they're a little bit more unique and a certain kind of individual that would be looking for it. But when they do it, then essentially this is a bought so-called a bought deal scenario where the shares are donated, but they need to be liquidated in the sense they need to be sold by somebody who's going to pay for them and turn them back to cash. So when we get involved with somebody who wants to donate their shares, on the other side of that equation is likely another shareholder in the company that wants to acquire a larger stake in the company and will then agree to a purchase price for them. So once they're donated, then it's that individual then that pays for them, then owns a larger stake of the company. And what that person has then paid for the shares that were donated, that amount that was paid in cash then goes into the gifting fund again. And so that's just a very strategic and tax efficient way to do some charitable giving for the long term. And then there's other topics where we get involved too. So Abundance Canada gets involved in a lot of discussions around the end of life planning, so the estate planning side of things as well. And so we don't put wills together, but we often will become in a bit of a collaborative relationship with a lawyer, so that when they've decided to name the charities in the will, then they will inform that individual that, well, there's another way that you can do it, and they'll maybe give them some caution around that, because what will happen is if you name the charities in the will, yes, that is, it's a legal way to do that. But what happens is then often there's like three or four, maybe five charities in the will, and then with that being in the legal document, then that actually entitles each of those charities to a copy of the will when it comes time for the executor to execute upon the estate. So every charity gets to receive a copy of the will, meaning they see every other charity that's also entitled to a portion. That charity then will give the will to their lawyer and say, we've been named in this estate. Here you go, Mr. Lawyer. Can you look into this and see if we're getting everything that we're entitled to? And so then the lawyers will roll up their sleeves and do what they can do best and look for ways to see if they, are they entitled for more? Can they get more? It turns into like a massive communication back and forth train that really can slow down the process of getting the gift to the charity. So say if Kindred was named among three or four other charities, it just slows down that process. So an alternative way to do that is simply naming Abundance Canada in the will as the recipient of the entire charitable portion that they want to go to charity. And then we have with that donor an addendum that lives outside of the will. It's a future gift disbursement agreement. And that is something that can be changed and edited as many times as they wish. And so rather than if over time you change your mind about a charity, you'd have to come back to your lawyer and then revise, pay the legal fees and do that again. And maybe in 3 years you have another change of heart about a certain charity, or you say, okay, I want to, remove the 20% I was giving to this charity because I'm not impressed by their work, and I'm going to add that 20% to the portion I was going to give to Kindred. So if you're working with our document, then you can easily edit that. There's no cost to do that. It can be done as many times as necessary. So it becomes more efficient because then we're the only ones that are a beneficiary for the charitable side, and none of the other charities get to see who else is named or what the percentages are. All they get when the executor sends the monies to us in the estate, then we simply go to our document and say, okay, 1, 2, 3, 4, 5, here's their check or EFT, and then we send it. And then if they ask us, oh, well, we would like to see a copy of the will so we can determine if there's a proper accounting for, and we're like, I'm sorry, you're not a named beneficiary, so you don't get to see a copy. Thank you very much, and away we go. And in fact, I've heard a story fairly recently. I was sitting down with a 93-year-old gentleman in Burnaby who was like working through this question, and he knew of a friend of his who'd passed away, had no dependents, and had named the Canadian Cancer Society as the beneficiary of like the largest portion of her estate, other than there was a condo in North Vancouver that she gave to a friend of hers. And suddenly that friend got a notification from the lawyers from the Cancer Society that they were viewing that, well, since this individual that passed on had given them the vast majority of the estate, that this other lady must have exerted undue influence upon the dearly departed, and therefore they should be entitled to the condo as well. So this poor woman had to then go into a fight with the charity lawyers. And thankfully, she found a female lawyer in Vancouver who took her case and fought hard for her and won, so she didn't lose that. But that's just like an extreme example of something that has been documented to happen sometimes when naming multiple charities in an estate, it can get complicated and tangled. So little aside story there, but yeah. So there's a lot of advantages in also tax advantages to offset estate taxes as well. So like giving like RSPs or RIFs in an estate to a charity is an efficient use if you still have them, is an efficient use of those types of financial products because there is a tax consequence upon the estate for those types of things. It doesn't affect a TFSA, so TFSA would be better to give that away to your beneficiaries. So there's a lot of different strategies to avoid, and then by gifting out RSP or a RIF, that type of gift will then, so if you've named Abundance for that gift, and then Abundance has instructions of where to distribute that, then that gift will bypass the will and avoids probate fees if probate is triggered for any purpose. So there's so a bunch of strategies to keep in mind. I'm not a estate planner, but I'm like conversant enough to know some of the advantages. But certainly, if this is a topic that anyone is looking into, then you should sit down with certified estate planner or estate planning lawyer to go over some of these strategies and think strategically about both your beneficiaries, your family, and so on, but then also the causes that you want to um, leave to. And so that picture, kind of that's to this point of this picture, that I think everyone needs in their corner to make the sort of the most strategic and helpful decisions for themselves. Is at some point you're going to need that tax advisor, right? The accountant. You're going to need the financial advisor, advice on your portfolio and what to do with appreciated securities. At some point in life, the estate lawyer is needed, and then in certain conversations that we're talking today, then a generosity advisor can be helpful. So having those connections. So all of this, how can this help you help Kindred, right? That's what we're here to talk about today. It's really about showing you a path towards unique, strategic, tax efficient giving that you might not have been aware of, and also how you can increase your future giving through thoughtfully thinking through your estate and how to do that. And that'll help, yeah, with these programs and build funds for the future. Every charitable cause has that need at some point of thinking, okay, we're dealing with all the operations in the whirlwind of the day to day, but if this cause must go on, if this cause will still matter 20 years from now when I'm gone from my role as executive director, what are we doing now to position ourselves for some predictable, sustainable long-term funding in the future? And so those are definitely conversations that I think charities are kind of working on and and then needing the supporters to sort of to be bringing the supporters into that conversation and build funds for the future that keep the impact going for decades to come. So, and really that's the point, right? Remember, right? The best time to plant a tree was 20 years ago, and the second best time is now. So the point there is start today. And thank you for your time and attention on this. I hope it didn't feel too much like drinking from a fire hose as I was kind of go through it all. But yeah, I'm going to hang out here and hopefully, we got about 15 minutes for questions if you like, and happy to stick around. And Chandra will share my information, I think, in a follow up. But by all means, you can take my email and reach out, and I'm happy to jump on a Zoom call and chat through your specific questions, offline at a different point, and or sit down at a Starbucks somewhere. I'm in Harrison Hot Springs, so but I travel between Langley and Abbotsford and Surrey, and visiting people face to face is often what I do and prefer to do with these types of conversations. So thank you, folks. Over to you, Chandra.